Do you know why Navy SEALs go through a brutal, endless training program that causes most of them to drop out before they graduate? Because when the pressure is highest, they must perform like unshakable robots or people will die. In trading, when emotions are the highest, you must perform like an unshakable robot or your bank account will die. This is The Subconscious Trader, hosted by Invest with Jake. Welcome to episode 2 of The Subconscious Trader, where we're going to continue talking about You Are the Edge. My name is Jacob Gabbard. I am from Invest with Jacob. And in this podcast, we talk about the psychological aspects of trading, which are the number one reason people lose money. They lose money because of fear, anger, sadness, happiness. All of those things contribute to bad trading habits. And in this podcast, we talk about that. Today, we're going to continue the You Are the Edge topic, which we started in episode 1. And essentially, it's that you control your outcome. Whether you're a good trader technically or a bad trader technically, if you can't control your emotions or your psychological well-being, you're going to lose money. Even great technical traders who can't control their emotions lose money because they often get into places they shouldn't be. So in this episode, we're going to talk about how to execute consistently in uncertainty and high-pressure situations. This is what the Navy SEALs intro had to do with today's episode. It's that the best places to enter the market often seem like the worst or the scariest or the hardest, and you must find the ability to overcome the fear of that area and execute in that situation. We're also going to talk about how to reset after drawdowns. Losing is part of trading. It's a big part of trading. And if you are looking at it correctly, losing is simply a learning opportunity. If you think about trading as the casino and the gambler, which side do you want to be? Do you want to be the gambler who might hit a jackpot here and there? Or do you want to be the casino who over time is making millions and millions of dollars? Yes, the gambler can take money from the casino from time to time, but through time, the gambler will lose and the casino will win because they have the probabilities stacked in their favor. This is simply a perfect analogy for trading. If you are trading setups that have the probabilities stacked in your favor and you have enough money and you have the right sizing and you have the right trading plan to take advantage of those situations, over time, you will make lots and lots of money in the market. However, if you're just randomly putting money down at certain spots because you hope it's going to win, or you randomly pick a slot machine because you hope it's going to win, you're just playing a luck game, and that's not how we want to trade. So we're going to talk about how to reset after drawdowns and understand that in the long run, you will do okay, and each individual trade is pointless to worry about, especially if you are sizing properly. And finally, we're going to talk about self-awareness. We'll get into a little bit of that today. That will probably extend into the next episode. I do want to keep these about 30 minutes in length. So with that, let's jump into our first topic. We're going to talk about executing consistently in uncertainty. And this is really, really hard for traders to understand and do. So many times I will see the market go down 2 or 3% in a day, which is a bad trading day. And then I will get comments and or emails that it's over, the bull run is over, the market's going down, there's no way they can recover from this. I can already tell that 1, the emotional value of that brain is high, and 2, they don't understand the overall market. This is simply a down day. Now, if we see certain aspects of the market change, then we can start to talk about when the market is truly changing directions. But one swift move does not a market make. In other words, one down day does not mean we're in a bear market. It simply means it was a bad day for the market. So these premises show themselves over and over again. When we came down off of COVID and we were nearing the target area we were looking for, everybody said, I don't understand how you think the market can go to 4,000 plus. I don't understand how you think we could ever be in a bull market again. The world is disintegrating. The Las Vegas Strip has closed for the first time in history. Unemployment's at the highest levels ever. We are paying out trillions of dollars of relief money. People are getting sick. We don't have a cure for this. Everything is horrible. Inflation is climbing like crazy. And the market put on one of the most historic rallies of all time, which will lead us into our news topic a few episodes later than this. Simply using emotion and world events to sculpt your market view, will cloud your market view, and it will not allow you to execute in times of uncertainty or times of fear or times of panic or times of euphoria. It goes both ways. When the bull market's raging on, people are saying, why would this ever go back down? What would cause it to go back down? What news event? Well, there are no news events that cause it to go back down. The market moves in waves. It does not move in straight lines. And these are long-term. You can measure these waves, and they're repeatable, and you see them over and over again. And then you start to understand structures and price action. And then you start to calm down, and you start to say, okay, this is how the market works. You have to have sellers to have buyers, and you have to have buyers to have sellers, and you have to have drawdowns in the market in order to get bull markets, and you have to have bull markets in order to make bear markets. All of that stuff is easily explainable and easily gone through, and there is a method to that madness. You just have to be calm enough and understand enough about the market to know where your entry points and where your key levels are, and that's where a lot of the systems come in, such as Elliott wave theory, such as my indicator, which is Invest with Jacob Pivot Point Pro, which factors in all these things and gives you robotic entries, taking emotion out of the trade. So if you want to check that out on my website, Invest with Jacob, you can do that. So how do you get to these levels? Well, one, you have to remain calm. If you know anything about me, or if you watch my channel for any amount of time, you know that I'm a Kentucky college fan, whether it be basketball or football, even baseball to a small degree, but it's baseball, so it's not really that fun. And one of the most famous moments in NCAA tournament history is when Christian Laettner hits a shot with 2 seconds to go to beat Kentucky on a full court pass. It's an incredible play. It's one of the most heartbreaking moments in Kentucky history. But once I was able to calm down and reflect on that, and I watched the I Hate Laettner documentary, and I read the Mike Krzyzewski book, their mindset in that situation is absolutely crazy. When they go to the huddle with 2.1 seconds left, the first thing Mike Krzyzewski does isn't go to the huddle and be like, okay, guys, we only got 2 seconds. We got to figure something out. Shit's going to happen. We'll draw up a play. Good luck. He says, we are going to win this game. He has a positive attitude, he is calm, and he is serious. We are going to win this game. If he comes in with a maniacal attitude, that is not a word. If he comes in with a crazy, maniacal attitude, or is just off his rocker, the players are going to lose confidence in him. They're not going to be able to perform, and the whole thing falls apart. Additionally, if you hear what Christian Laettner said, he said, I just calmed myself down. And I knew that if I caught the ball, I was going to be able to make the shot. So all I had to do was catch the ball, and I would win the game. These attitudes in times of high stress, these abilities are must-haves, and they are must-haves in trading. Was he for sure going to 100% make that shot? No, but he had a lot of confidence in himself. He went into the situation knowing he could and knowing what he needed to do to make that shot, and that's what's important. If he misses the shot, he knows that that outcome is going to suck, but it's not going to define his career as one of the best college basketball players of all time. It's just simply a moment that it didn't work out. That is the same thing in trading. You must be calm and ready to take your shot when you get it. And if that shot fails, that's okay. There's going to be more shots to take. There's going to be more legacy to make. There's going to be more money to make. One trade doesn't define you as a trader. It's simply a trade that didn't go your way. So let's look at this on a chart so that we can kind of understand how emotion plays such a big role in trading. So we're on the 5-minute SPY chart here, guys, and I have it in bar replay mode. And as you watch a replay, everything is easy to do because you already know what's going to happen, and it's a replay and you're not trading it in real time. So it's really easy to be like, yeah, of course I would trade there. In real time, these bars get really scary really fast. So it tells people, yeah, this is the key level, but look how fast it's moving to the downside. Why would they ever buy? So as we look at this chart, you've got your key level here. So the reason this is our key level is it's a clear low that spiked hard back to the upside. And if you look down here on that low, the volume spike is also really big. I'm not going to get into a whole technical analysis breakdown. I'm just giving you a basis of why this is a key level. So you got a big volume spike on a low. If you look across here on this volume level, only closing volume got higher than this volume level, and closing volume is generally the highest levels of all days. So this closing bar got higher, and then, nothing else really did, a couple closing bars. So this is a huge volume spike on this low, telling you that the buyers were ready to buy that area the first time it got there. So now we're way up here at 520, and I'm going to hit the bar replay mode, and I want you to look at how it gets down there. Now, when it gets here, are we simply just going to buy blindly? No. We want a setup off of that, because they can roll right through here if it's a really bad market. But if it's what happens 85% of the time, they're going to bounce this zone. So are they going to blow through it sometimes? Of course they are. There are bear markets that just run through support. However, is it more probable that they're going to hold here and I should trade it if I get the setup? Absolutely. So let's zoom in. I have the black line as our key level. Let's zoom in so we can see it better. And let's look at how this played out. So the market starts to the downside. Okay, then it's kind of choppy, then down, big down, down, down. And this is where you start getting guys in my chat saying, hey, Jake, what's going on? Why is the market going down like this? Oh, my God, when's it going to stop? Do we have anything we should do? Should we be shorting? Blah, blah, blah. And the panic starts to set in. And you can see they're ripping it down into this level. They're almost 100 points down now, or 10 SPY points, 100 points on the ES. They're almost 10 SPY points down, and they're getting down to our key level. So this is not looking like a good day. Then they give you a little spike up here, but then they continue down to where? Our key level. Now we're looking for a setup. So we're looking for, I'm going to pause this real quick. What we're looking for off of this level, and guys, this level is the support level. They can come up just short of this level. They can come up or spike through this level a little bit, or they can hit the level exactly. This area is what we're looking for, not specifically the exact line. So what we want to see here is some kind of move like this. Obviously, I know what's going to happen, and you probably do too. They get down here. The market is down. They opened at 521, and they're down at 509. So they're down 12 SPY points, 120 ES points, or about a little over 2% here on the day. And we are, getting toward the end of the day. It looks like it's just going to be an absolute face ripper to the downside. But we get to the key level. Okay, now we're looking for the setup. We spike through. Okay, we get a little bit of a move up here. That's good. They come back to the key level. Okay, so now we have a setup, right? We have a low. We have a high that they made. Then we have a lower high. Or I'm sorry, a higher low. I said that backwards. We have a higher low. So this is tradable because now we're back at this peak, and one of two things is going to happen. They're going to blow through and go, at least up here to 513, which gives me 3 points of trading, or they're going to fail here and come back down. But now I have a place to put my stops. If I had just traded here, if I just said, okay, we're in the zone, I have no idea where to put my stop. So I wait for the setup. I get a higher low. Now I have a stop. I can enter the trade here at about 510, looking for the first target at 513, right? Back up into this point, and let's see how they do. So there you go. They hit the 513 zone, and not only that, at the close, they hit 514. Now, as they keep going here, this is still a key level. This would be a great swing trade level as well because there was so much volume on that level, you know that they want to buy it. So as we keep going, we're going to see that this plays out to the upside. Now, during this move down, no one was thinking about buying the market. They were like, oh my God, look at the market. It's down 120 ES points. It's down 12 SPY points. This is ugly. This is not going to play out well. Well, if you were paying attention and did your homework, when it got down here and everybody was panicking, you were salivating. You were like, yes, now give me the bounce I'm looking for. Yes, perfect. Give me the low. Yes, perfect. And then you enter. This is when you must execute in times of uncertainty. And to be honest with you, this day wasn't even that bad. You see a lot of times where you get red bars like this long, and then the next red bar is like this, and then they do this, and then they do this. Either way, they came into the key area, you got a setup, and you took the trade regardless of how scary the market looked. Now, if that trade doesn't work out, is that okay? 100%. It is 100% okay because that was a valid, good trade setup. You can see they're going to open the next day up here at like 518. We got in, you would have got in around 510. You're doing amazing on this. And then your next key level, of course, is going to be right here because that's where the breakdown point is. So as we look at that, we can see that the market found its key level, gave us a setup, and we took it. Again, did it have to win? No. Was it a good trade even if it lost? 100%. That's what we're looking for. That's how you find highs and lows, by the way, and that's how the Pivot Point Pro does it. It understands the key levels, and it uses them. So they open up the next day. It is 519, so you were up, and they continue on, by the way. But you were up 9 points overnight because you took the right trade setup. This is when you must act in times of uncertainty. This is when you must be a robot. When the pressure is the highest, when it seems the scariest, you have to execute. Most people will say, yeah, it's a key level, but it looks scary. And then when it gets here, say, oh, I should have taken the trade. Yes, you should have. And guess what? If you didn't take that trade, don't chase it. There are more trades coming. Take it as a learning opportunity and say, trust the process. Take it as a learning opportunity and say, next time, enter the trade. Okay? Don't chase trades because you made a bad decision or you just made a scared decision. I won't say a bad decision and didn't enter that trade. All right? So that's how we execute in times of uncertainty and how we must execute in times of uncertainty. I am not certain they're going to bounce here, but I certainly feel good about it because this is a key level on high volume and I have a setup, so I think I should take that trade. Okay, so that is executing in uncertainty. Now, let's say this didn't work out the way we had hoped and the market shot to the downside, right? It just continued in a careening way and we got stopped out here. Okay, no big deal. But let's say that is also like the 5th, 10th, 11th trade in a row that we've lost. That happens, guys. Even the best traders go through losing streaks because the market acts irrationally. It is an emotional being. It certainly doesn't have life in the sense of blood and stuff, but it's controlled by people who are emotional. Thus, the market is emotional. So it can act irrationally for a long period of time, and it can break a lot of levels that should hold. So you can go through losing streaks because you took good trades that didn't work out. That is not a reason to doubt the system. That is not a reason to make bad trades. That is not a reason to chase, get angry, revenge trade. But if you start to feel that way, if you start to feel like, oh my God, this is uncontrollable, I need to do something different, take a breath, walk around, skip a day of trading, size down so you're losing less money until you start to get comfortable again and get your confidence back. But it's just simply a losing streak. Casinos occasionally, very rarely, but occasionally give up multi-million-dollar jackpots or even million-dollar jackpots. That's probably a losing day for the casino overall. Probably. I mean, I don't know for sure. I don't know their bottom lines, but I'm going to guess that if they give up $1 million jackpot, that's probably a tough day for them. Or a losing day, not a tough day. They're always in good shape. But they know that the next 30, next 60, next year, they're probably not giving up another $1 million jackpot. And all of the little wins pay off and all of the big wins pay off where the whales lose all their money. There are plenty of times that the casinos get taken for lots of money, whether it be a whale hits some big things in craps or whatever. They know that over time, though, it's all going to be fine. It's not a one-day thing. It's not a one-trade thing. It is a culmination of probabilities. The house always has the odds in their favor. There's no exception to that. And they know that that will play out over time because of the law of big numbers. So When you feel like nothing is working, woe is me, despair, or when you feel like I can't be beat, I can't lose, do not adjust your trading style. Meaning, if you have a program that's working, and then, let's say it works for 2 months, and then you have 3 weeks or 2 weeks of it's just hard. The trades just aren't going your way. Well, right now you have 2 months of winning data and 2 weeks of losing data. You're going to need more data to find out if your system works or if the system you're using works. And you got to be honest with yourself. Are you following the rules? And so you stay the course until you can firmly prove, hey, this isn't working out, or this system has flaws, or whatever the case is. Most systems by reputable traders work. Do they work every time? Of course not. No one has a system like that. If they did, we all know the answer. So you must be willing to give the time to the system to make sure that it's not the system that's the problem, because the system is rarely the problem. It's usually you. That's why you are the edge. So you must reset yourself when you get into those modes. The best way to do that, I usually take the day off of trading. There's been days I've come in and told my traders, it's not often because our system's pretty good and I've done this a long time, so I don't get too rattled. But there's been times where other factors in my life, maybe I'm having a tough time with my family, maybe my kid's sick, maybe I'm doing other things that aren't great and I'm just in a bad headspace, that I come in and I say, hey, today's not a day for me to trade. I'm not going to feel good about it. I'm not going to execute today. It's just not good. That is the best way to reset yourself. Give yourself a mental break, rest, and then come back the next day refreshed and ready to do it again. And if it's still struggling, just understand that it takes time sometimes for losing streaks to end. There are times that the market does what it's not supposed to do or not highly probable moves. That doesn't mean that the system doesn't work. It simply means that that's part of when the probabilities go against you. Probabilities mean you're going to lose too. It just means over time you have an edge. And quite frankly, you are the edge. So, how do we overcome that feeling? I don't have that feeling much anymore. I've become a pretty robotic trader. I don't even consider a loss as a problem. I don't consider losing streaks as a problem. The biggest thing I have now is that I help other people trade, and I know what their mindset is because I was there one time too. And I struggle with, I know how they're feeling. So if we have a 5, 10 trade losing streak, whatever it is, or we're just having a bad month, because that happens, I feel bad for their mental state because maybe they're not at the level I'm at yet, and they're starting to feel the pressure in their mind of things not working out, and then they start to make bad decisions and lose more money. That's where I try to coach and help and steer them back in the right direction, because that's my job. And that's one of the things I wanted to do when I started trading with other people and bringing other people in. It's not that I was trying to sell some guru scam shit. It's because I know how hard it is to trade, and I'm happy to trade with other people because trading's kind of lonely. And I'm so happy when I help them and see them get that light bulb moment and everything goes off in their head and they're like, oh my God, I see what he's saying. I see how to overcome this. I understand where I can improve. That's an incredible thing to hear from somebody, that because of you, me, or whoever it is, when they say to me, because of you, I am making money in the market. I've had several traders say, I have to quit your service because I've basically become a professional trader because of you. That's the coolest thing I could ever hear from anybody. I have a trader who's still with me who said I was able to let my wife, after maternity leave, just stay home from work because I was making enough money trading to support her because of you. There is nothing neater than that. The money doesn't mean anything to me in that regard. My happiness, my mental state, my body language, my life is so much better when I hear those things. On the flip side, it breaks my heart when I hear people say, I just couldn't control myself and I blew up my account. And I've had that happen too. I am here to help, but you have to be accountable for your decisions. And you have to train yourself to be accountable. And that's why I'm here, is to help you train yourself to be accountable. so that you can have the alpha mentality of, if there's a trigger that I know makes me angry or makes me too happy, because too happy is a problem in trading too, then people overtrade their size. They trade way too much money, and that trade, they win 10 in a row, but the trade that they triple down on went against them, and they lost all 10 profit from all 10 trades before and then some. So happiness can be a problem too. You just have to be a robot. Never too high, never too low. It just is. Trading just is. You have a probabilities platform. So how do you overcome those things? Well, the first thing you do is you don't ignore the triggers. You track them. You say, hey, I did something here against the rules. Why did I do that? Why did I triple down on this trade when normally I would have the normal proper sizing? Oh, it's because I won a bunch of trades in a row and I felt invincible. It's like drinking a whole bunch of alcohol and putting too much money in a slot machine because you won some money earlier at blackjack, right? You feel invincible. You feel like, I'm going to turn this $300 profit into a $10,000 profit, and then you're not negative 700. Don't ignore what happened. Go back and say, what happened? Why did I do that? Why did I re-enter a trade that I knew I shouldn't have entered? Was I mad that I missed the trade? FOMO. Was I mad that I lost money? Anger trading. What, did I get out of the trade too early because I was fear of losing? What did I do? What emotion, what mental state was I in when I made a bad decision? Because the more you talk about it and put it in front of yourself, the more you'll recognize it before you do it, and then you'll stop doing it. Maybe not all right at once. You might do it again, and then you might do it again. You might do it again a week later, then you might do it again 6 weeks later, then you might never do it again. Just depends on how hard you try to recognize the behavior. So don't ignore it. Track it. What thought process is going on in your mind? What emotion? What belief did I have? Did I believe, this is never going to go down, so I might as well get long? Those types of things. Those create the ability to correct and self-correct before you do it instead of after. So track all of your losses. Make sure any time that you didn't follow the rules, you should be dissecting what happened with your trade. What did you do mentally? What did you do physically? Were you tired? Was your family in a distress? Did somebody die? Did something happen that you're just not in the right trading space or mental space to do this? And next time you need to say, hey, when I'm mentally unavailable, I can't sit in front of the computer and make decisions about the future of my life and my money. That's what you need to do. So those are some things that allow us to become robotic and professional. We stay calm. We execute our game plan no matter how scary it seems. No matter how fast that market's going down, when it hits the key level and gives us a setup, we take the trade. No matter how fast the market's going up, when it hits the key level and gives us a setup, we take the trade. Then we have to control ourselves when we are spiraling, when things aren't going our way. We have to be able to reset ourselves by taking time away from trading, by sizing down our trade so that if we are continuing to lose, it's less and it doesn't feel as hurtful. All of those things matter. And then when we do make mistakes, we can't ignore those mistakes. We must track them. We must look at what happened when I made that mistake. Was I angry? Was I happy? Those are the things that lead us down the right path of trading. All right, guys, I hope you enjoyed this episode of The Subconscious Trader. In our next episode, we're going to talk about how your identity drives your behavior and how your internal metrics are greater than your external results. Thank you for watching. This is The Subconscious Trader with Jacob Gabbard and Invest with Jacob.